Welcome to Acclime Conversations, where we meet the business people in Vietnam who matter. Today, I'm talking to Alex Crane, who's the Managing Director of Knight Frank Vietnam. Alex, welcome very much.
Thank you very much.
Great to have you here today. I'm looking forward to talking a bit about the property sector and really digging deep into your insights and where things are at. Now, you've been in Vietnam for around 10 years now. But before we go into your experience and what you've been doing and what we're seeing for the future, I always like to understand a bit about the background. What brought you here? Why are you here? It's always a good question.
I ask myself the same often. 10 years, 11 actually here. I was in real estate in the UK. So I'm a sort of first time expat, if you like, first overseas job. Reason for leaving UK, I actually came here as a bit of a career break. That lasted about a month before I was working in real estate again. Thereafter, I'm in a country that has adopted me, looked after me, made me feel very comfortable. Then, of course, economic rise, job opportunity, and riding the wave that Vietnam is on, I suppose, has sort of kept me here in the longer term.
And consistent story we often hear of you've got experience and you adapt and you enjoy and can fit into the country and offer something and it offers something back to you, which then leads into where we are today. So you work for around 7 years for Cushman Wakefield, you led that business for quite a while, and you've just started the new operations for Knight Frank Vietnam. What is Knight Frank's intention? What are you trying to achieve? You're leading the business here. What are the key things that you're trying to sort of achieve in the short term and long term with Knight Frank?
Sure. Well, I guess the way we've structured it, and I got to thank Acclime for support in that, it is quite different to my previous firm and I think the other firms that are here. Knight Frank is the largest privately owned real estate consultancy in the world. So being privately owned means that obviously the leadership own the business, care about the business, understand clients. So we sort of share that culture. So I suppose that's something that's important to me in this new entity, in this new setup, and servicing clients. And our people, it's a people business. Our business is solely about that, really. So having a business that's owned by, operated by, the people that are at the front line makes a huge difference.
And not a franchise.
And not a franchise. So yeah. So the Knight Frank have been sort of a partner of mine unofficially, I guess, for a long time in terms of referring inbound inquiries to us, investors, occupiers. Having seen the rise of that, obviously we start the conversation about them being represented here. So they have invested, they are the majority shareholder of the business here. So they have a founded intent of getting this right, obviously with local people that ultimately will own the business going forward. Which for me is very interesting in terms of the journey and the legacy that we can maybe leave, is that we will be owned by Vietnamese employees in the future.
And that's the path. What's the focus? What is the key focuses you're looking at in the short term?
I guess Knight Frank are very well known as a high-end residential advisory and agency. In Vietnam, we will take a commercial focus to start with. My background, my partner's background are very much led in the commercial markets. So that's where most of our clients operate. That's where the Knight Frank business will be focused to start with. We'll be very active around office, industrial, a little bit of retail to start. And we have the freedom to obviously expand into new services in the next few years. I won't tell you the whole secret, but of course we have a multi-service business across the world we can leverage. We will be doing that in future, but to start with, commercial brokerage consultancy is where our expertise are. Therefore, we'll focus.
Now, the pandemic has caused issues, but also opportunities. Start on the commercial side of things. Where has the pandemic led us now? Where's the situation regarding commercial real estate, Ho Chi Minh City and/or Hanoi? What are your thoughts on that, and what should we be looking out for?
I think the first thing to comment on, I think, is the resilience of the market that we've seen through pandemic. So if we look specifically at office market, vacancy rates have remained quite low. Rents are still increasing. And we've seen a return to work. We've seen a return to office very, very rapidly. We've had essentially 2 lockdowns. What we've noticed, obviously, is the local population prefer to work in the office. We all know that the office is a very social environment. The pantry is the local community for many of us.
Regardless what you try to do, that pantry is always going to be an important part of that office.
It's wonderful, and I think I always joke with the Vietnamese that back home I wouldn't hang out with my colleagues like that. But I think here that's quite a very unique nuance that we have. But it also encourages companies that are returning to office very quickly, which is obviously supporting that market. A lot of the world had questions about future use of office space. In Vietnam, we sort of reverted to normal pretty quickly, so that supported the market, kept rents pretty buoyant, occupancy rates very strong. So it hasn't really disrupted us too much.
So what's the sort of into the near future grade A and B pluses? Is there going to be a supply constraint then as a result of this?
We're in a supply constraint. So the cause, I think, of this high occupancy and increasing rent is lack of development, frankly, in the last few years for a multitude of reasons. One is pandemic, one has been permitting and investigation into land use. So that unnaturally sort of restricted supply, that's now...
And that's Ho Chi Minh City. Hanoi is a bit better on the supply side?
It is, and actually it's actually creating a more liquid market there. And so there is vacancy, but not unreasonable amounts of vacancy. So rents, again, have sort of sustained pricing. Again, I think in Hanoi, the dynamic is more where you are as opposed in search of that supply. So we've seen the shift from Hoan Kim to West just because infrastructure development
and that's where the buildings are. Yeah.
Correct. But the constraints obviously in Ho Chi Minh City are more severe. So we're in we're sub 10% vacancy. We actually think that rents this year and next could increase as much as 15% for time.
And will that, given the issues in Ho Chi Minh City, particular with regard to permitting and authorities and approvals, is this constraint going to be for quite a while, or is there a pipeline ready to go into the market to sort of soak some of that up?
Yes, there's a bit, but it's not a wave of supply. So over the course of predominantly 2023 and onwards is when the supply starts to come back. We'll see a lot of development in areas like 2TM is going to be very important coming forward. Not only is the location, but just in terms of a pricing dynamic versus the old CBD, I guess, of District 1. So that supply will start to come through. It won't cause an overwhelming amount of supply. It won't cause rents to fall dramatically. There'll be a shift of how occupiers are using space. And I think that's probably the note for office occupiers is to try and get ahead of this issue that's facing us for the next 3 years. So that's another lease cycle for many people. They have to go through this pressure situation.
And is that reconfiguring the sort of hybrid work from home model? Is that using satellite offices? Where do you see that moving, given this, there is going to be a constraint as you're talking moving forward? What should sort of tenants be thinking about for occupiers be sort of planning for?
There's a confluence of things. And I think we have the benefit of options now as occupiers, and we have proven we can work from anywhere. The business infrastructure is set up to allow us to do this. So there will be a blend, different companies, different working styles will use offices in a different way, always have. But there will be those that are using maybe a hybrid of flex space. There's the third space, which is the coffee shop or wherever companies are comfortable for their employees to work. Occupiers will leverage that, I think, to ensure that they're not getting hit too hard in this rent increase period we're going through, that maybe some headquarters will get a little smaller as parts of the business are put out into these sort of hybrid locations or third spaces, because we understand that business can operate that way.
We've learned through lockdowns that you have flexibility where we may not have thought we had before.
Yes, but it's not going to be total flexibility. We've also learned that the office is important for interactions, for collaboration, and particularly in a work environment like we have, and in a region like we are, which is very unique, where there are more languages spoken in Asia than, say, northern US. We need to have that hub space. So we're thinking that headquarters, people may use them differently. There may be some reduction in size or use, but that will be a net gain in occupancy in other locations. That will be a bit of a leverage opportunity for a lot of occupiers. It's also a consideration for the workers themselves. Now, it's not an easy place to find talent. There is, and it has been the situation for a few years now. So creating these environments, giving people the flexibility and freedom, I think is something that's with us forever now.
And it's something we've had to change as business people. It's different to what it was a few years ago. It's very different thought process we have to go through.
Correct. And as employers, we're now looking very much on employee well-being, benefit, and that hybrid also leads into flexi time for people with families, for example. I think that's a good sea change that we're seeing coming out of the pandemic.
And looking at pandemic then and changes, retail's obviously changed. E-commerce has stepped in. There's retail hesitancy, even though in some markets we've seen retail numbers bouncing back to pre-pandemic levels. But that interaction with retail space, they've got constraints on commercial offices. Where does that lead, and where's the discussion on retail space post-pandemic and retail demand?
We're accelerating a pre-pandemic kind of trend, as you mentioned, with the e-commerce side of it coming into the fore. I think what will come through in future is that has to be integrated into traditional retail. We've seen that in places like the US with e-commerce coming into brick and mortar. We've seen in Australia, you've got this it's starting to integrate this sort of click and collect style that goes into traditional retail. So it has to form this blend. So I think that's something that will come through this. Well, the pandemic obviously has impacted downtown retail. Your larger sort of shopping malls have been impacted. Investors have had to subsidize rents in many cases. They've a lot of tenant support. Coming out of this, we're going to start obviously with tourism coming back is a double-edged sword. So what we think is going to happen, you have this sort of luxury end of the market, which maybe has been supported by a pandemic because wealthy Vietnamese haven't been able to travel overseas, so they've been buying local. This may change. We may have some tourists coming in, but we may see this export of wealth buying luxury items overseas. Right. So there's there are two sides to that story. Ultimately, we've seen neighborhood retailers perform very well. We've seen convenience stores have become more important than ever before. F&B has rebounded very well. What I think is going to be interesting is how you blend that neighborhood e-commerce and then larger shopping mall environment into one. It has to become everything. It has to become destination. It has to become local convenience. It has to become an experience. It has to become attractive for families. And it will be led by design coming out of the pandemic, given these things that have been apparent for some time in the retail area. It has to speed up.
And that structural change is going to be really important. Does that impact the price, given the vacancies out there? Is the price being adjusted accordingly, or is that fairly medium term? The price in Vietnam is the price, and it doesn't. We're not going to see a lot of changes in the rent.
Yeah, I made a few enemies in 2018. I said retail rents won't increase for 10 years. We're on that trajectory. We're still there.
You're holding firm?
I still hold firm on that. That's not to say that the retail sector's in trouble. We are faced with, again, the supply, a lot of supply coming through.
There's a structural shift. It's just, it is what it is.
And often it's a legacy policy that you have to build this amount of retail space. Now, the investor developers have to learn to deal with this, but they're not going to be rewarded in rents increasing. The good news with that is that as supply has arrived, it hasn't forced rents down. Developers getting smarter, in terms of their design operation management. They're going to have to stay very hot on that, but it's a case of sustaining market rents as opposed to capitalizing on rent increases. I still don't see those coming through yet. Certain locations, of course, are going to see that. Again, we touch on new urban areas, of course. Maybe there's a shift in strategy for developers and investors looking at neighborhood and looking at different types of location as they might have considered previously. You'd always look at downtown prime. Maybe that can actually be more of a sort of hub spoke thing in future as we push out into neighborhoods. And as I said, the enabler maybe is the e-commerce, as retail malls have to become obviously for retail, but maybe they are the distribution hub in future. They are the touch point for click and collect for the local communities. So there are parts that might actually have benefit and positive impact in rents in locality. Average, not going to increase.
And I suppose that's the difference between Hanoi and Ho Chi Minh City, where you do have a core in Ho Chi Minh City, and then is it that sort of traditionally it was all concentrated with a bit of spill out, where Hanoi is far more diverse and therefore maybe a little bit more flexible with having to reconstruct quite as much as Ho Chi Minh City does.
Correct. And I think Hanoi has the infrastructure to support that, and multiple CBD, multiple in that community around. Ho Chi Minh is pushing in that direction. Is happening to the credit very quickly in terms of that infra that's pushing and enabling the city to spread into these.
And in one of those, the push outs is into 2 Tiem. Though the land price issues where we had those ridiculous prices and then the bidders pulled out because obviously the prices were not sustainable, will that have an impact, do you think, on the market? Is there something wrong with the market pricing for sort of land, and is that going to feed in supply for both residential, commercial? There's a new financial hub we're talking about. Where's that going to flow into? Because the lack of transparency in pricing has always been an issue in Vietnam. Is that going to make it worse? Is that going to make investors distrust being involved in the process, particularly the foreign investors where have backed a lot of these larger projects in recent times?
Yeah, thanks for the easy question.
Oh, nothing but easy questions here.
No, look, I think there's been a reluctance of the market to speak about this, and it needs to be spoken about. So thank you for the question. It needs to be addressed. And I think the situation with the auction itself, now the auction process is probably the oldest style of selling anything, and therefore should be normally quite transparent and straightforward. And it should ultimately breed best results by the best buyers that are qualified. We didn't really get that. And part of that might just be down to timing. The communication wasn't there, and it couldn't breed the larger, more professional investors' time to actually make a good assessment and therefore good bids on that. The prices that we saw, yes, they were overinflated, not sustainable. It would have led to some outrageously high sales rates would have been required for those apartments to justify the land price plus the construction cost. We would have had to, frankly, those apartments would have had to sell at equivalent price to central Singapore. We're just not there as a market. So that reset, something has to reset for that to happen. I think a lot of that is going to be led by government policy. Needs to come forward and say this is in the event of this happens next. There needs to be, again, maybe transparency, but an opportunity for the foreign groups maybe to mobilize, because running those assessments on land is not something that you can do in a few weeks. It's an expensive process. Teams of people within these developers need to analyze. Many variables and considerations need to be made. So you have to give an opportunity for maybe professional developers to mobilize and get to a position where they're comfortable to make rational bids on the land. And I think that ultimately should be the process for auctions.
So 2TM's still attractive, and it's the prime side. I've been here for many years, and it's always been the dream. 2TM's coming, and it is. Is that still attractive from a foreign investment perspective? Are we going to see the masses of workers relocate, the financial centre relocate there? Is this still a sort of long-term dream, or is it a relatively short-term process that's going to happen?
Yeah, I mean, it's a long term in the pipe already, 2TM. Firm believer in it. I think residents like to be there. Companies have already started to commit headquarters there. Early mover includes IKEA, moving their very, very early doors. The riverfront there is very unique. It will always be attractive to investors, whether they're developers or home buyers as a location. The infrastructure is excellent. It's a wonderful connection to downtown, but equally, obviously looking to the east, which is very important. Ho Chi Minh is the manufacturing hub and export zones.
A new bridge opened in a few weeks' time as well.
And a brand new bridge, which is looking wonderful. It's always going to be of interest. The pricing sort of frenzy that happened is not something that can sustain. It will slow down foreign investors looking there. As I said, for the same reasons, you can't just act on these things and try and compete with maybe these sort of peaks in pricing. So investors are looking at this in a rational, professional way, so they won't partake. They're not going to react, I think, quickly enough for that to be sustainable. Looking at it from an appraisal standpoint, we have to consider the land there as it was before the auction. Deals have not closed. Sales rates of those apartments haven't changed. So it sort of created this quite uncomfortable position for new investors, developers, but equally some that are already there with impact on land use fees. And that's probably the most disruptive part.
But the underlying benchmarks haven't actually changed when you
fundamentals of the market haven't. And as a destination, as a location, I think it's wonderful. There's a lot of opportunities for some international standard development there. That whether it's apartments, whether it's an office, whether it's retail, it's going to be a very, very important hub of the Ho Chi Minh City wider area. The interesting parts are how the pricing in commercial markets are going to play versus Ho Chi Minh City Central and the old pricing. Being a separate district, of course, now, an authority zone. So there's some fun times ahead in terms of how to appraise and look and be successful with a development or investment there. But it just is almost an open canvas in terms of design, and actually that's going to bring forward some pretty, of course, modern new buildings, but I think some forward-thinking ideas of how space is used, and looking, as we said, trends are changing very fast. 2TM has a great opportunity to be at the forefront.
Yeah, which is that financial centre discussion that's being looked at as one of the options. So that sort of also feeds me into another sector, industrial logistics, and looking more of those service sectors out of the main cities. Now, Vietnam, we increased exports by 25% last year, which is surprising given the constraints that existed during the pandemic and lockdowns. And that's not slowing down. We're seeing the first 2 months this year, we're 10%, exports are up more than 10% the first 2 months of the year, and we'll see further growth. And part of that is the sort of movement away from China, part of it is just Vietnam consolidating 30 years of focusing on foreign investment for manufacturing, export and supply chain advancement. That's putting constraints. There's a lack of accessible industrial properties. People are moving further out. Logistic needs have changed. Are we pricing ourselves out of the market though with what's happening? Can Vietnam supply that commercial, so that industrial, that logistics, that the locations investors need to make those continued investment in Vietnam to keep that going?
Yeah, and I think that's the critical point is, are we competitive? Are we staying competitive? There is pressure on land price. There's been some very heavy increases in land price in the last few years. There's been speculation in that sector, which can be, again, quite disruptive for a very important part of the Vietnamese economy. We also have another sort of external to real estate related issue, which is the logistic cost itself. Now, shipping to the US at the moment is costing you, what, 20,000 plus now.
It's just been dropping. I've been talking to manufacturers, and we're now seeing the forward pricing dropping, because that 20,000 per container is just been, it's been, for a lot of low value sectors, unsustainable completely.
Correct. So it has to, something has to drop, something has to happen for Vietnam to stay competitive. Otherwise, these manufacturers are moving to Mexico. They're not coming to Southeast Asia just because the forwarding freight cost is so high. So that needs to balance out, and it will post-pandemic. I think even the logistics guys are saying the same.
I've seen forward prices are definitely becoming better. I wouldn't say good. They're becoming better. We've dropped off the top. But for how long? We don't, again, so that's important. So logistics, and I see logistics, sorry to cut in, logistics has always been a constraint for Vietnam, for road, for port access, moving things around. That's always been the constraint. And okay, the government does, the freeways we're getting now, the tollways, great. Does that compensate? Is the available industrial parks, is the labour force that attach it to that, and therefore is it worthwhile investors taking that plunge into real estate?
Correct. And again, I think that's just where we have a limitation now in terms of supply. Again, so vacancy is very low across the established industrial parks. We have a limitation on new parks that will be coming into fruition in the next couple of years. So this supply pressure is apparent. It will keep industrial land prices increasing, which is, of course, more expensive for manufacturers and investors that would like to be here, perhaps. The flip side of that is rents also are increasing for the smaller operators and users of the buildings as opposed to the industrial land itself. So there is a constraint in terms of just physical. We do not have enough land available for this at the moment.
But that's an investment opportunity, because what we're seeing is this demand, particularly in distribution centres and things like that, cold storage. That's foreign investors are doing that. Foreign investors are taking that opportunity, but also doing joint ventures, building greenfield projects for lease. Is that sort of coming more to the fore to sort of build for the future?
It certainly is. I think with data centers, there's some regulatory background that has to change, but I think we're at the front of that, and the Vietnamese government are very forward thinking in that sense. So I think that's a market that is not going to be accelerating massively in the next 1 year, maybe 2, but of course in future, yes. Cold chain, we're starting from virtually zero, so there's going to be a huge amount of growth in the segment. Again, driven by pandemic and how we shop and use. But ultimately, yes, foreign investors want to be here. They want to be part of the story. Greenfield is very protracted. Speed to deal is very difficult. Again, that comes down to a competition standpoint. Is it easier to invest in a meter of land in Vietnam or maybe in Mexico? And we are talking global investors. These guys can operate in other markets very comfortably, and sometimes that's the goes back to that competition standpoint of are we providing the right returns and ease of doing business here, as you could perhaps in Mexico, Philippines, wherever you want.
So if I'm a large foreign property investor and I've not touched Vietnam before and I'm interested in learning and dipping my toe and sort of looking at something, what would you recommend? Where would you suggest are the best opportunities? Okay, different risk appetites for different investors, but where would you be suggesting they start looking?
I think, yeah, again, depending on their appetite. So easiest route of entry, obviously, as we've sort of touched on, is the joint venture route with local partners. And I think that's more accessible than it was even 3-4 years ago. I mean, the Vietnamese, the sophistication and willingness to do business with foreign entities is much greater, and they're very good at it. So I think that's probably one route, and we've seen that very successfully done in the logistics segment. We've seen that in the past in retail. So it depends on whether they're looking at that kind of structure, and again, I suppose it depends on their growth appetite also. JVs are the best way of unlocking maybe future land bank for development pipeline. If it's operating asset, you probably come and do that slightly different.
Now, but just generally, would you suggest, is commercial going to be good yields? Is there enough product to actually look at if you want to come in and invest in an existing commercial product, for example, in Hanoi or Ho Chi Minh City?
I think commercial, yes. So again, we probably do not have enough asset for sale for demand at the moment. So that's having an impact obviously on capitalization rate. So it's more expensive for the investors to be here. Not necessarily a bad thing. I think it's a wonderful thing for potential sellers in Vietnam owners, if they want to capitalize on these assets. Now is actually a pretty solid time to do that. Industrial yields are now lower than retail. Back when I started out, they were the other way around. Retail was a safe bet. Industrial was always the more risky. It's completely flipped around, obviously, as pandemics has shown. Challenges of entry, obviously, in all of those areas. But I think I wouldn't have any shyness at all about looking at an office asset in either city, industrial across the country. Yes, it's getting a bit toppy in terms of some of the pricing in those locations, but the drivers of Vietnam aren't really going to change. And so as an asset type, it's still going to look very attractive. And as you said, we've got a lot of growth in those data centers, in things like cold chain. So very attractive.
And we're seeing the data centers, we're seeing them enter now because of security laws, etc. It's happening. So this is an interesting path. Now we haven't touched on residential. Now obviously high-end residential, as you said at the start, it's traditionally one of what Knight Frank does and what sort of a core, and it's not necessarily where you're focusing on, but I know you have a good interest in the sector and understand. Where's the supply demand at the moment with residential? Because we've seen in other parts of the world some really strange movements in prices and demands, and lockdowns and pandemic has caused some strange results. Where we are in Vietnam? What's the situation with the sort of, I'm looking at the higher end, the sort of residential space?
Yeah, I mean, if we look at globally for the minute, we saw this sort of dip in price and price decreases, but rebound very quickly in key cities. Actually, Vietnam, we didn't really have we actually had a sustained growth throughout. There's been changes and actually top performers in large cities in the West, for example. There's been a shift to second home. Maybe people looking to have that bolt hole outside of the city or move the family further away from these dense urbanized areas. Again, we don't really experience that here in Vietnam, but it will potentially tell a story, and I think there is a story about second home ownership. I think about genuine, seaside kind of real estate for wealthy people is something that will.
And we're seeing them being developed on the coast. We're seeing that the product being developed to create that lifestyle. You can see that happening.
Correct. Yeah, and we're still going to see, and that's sort of leading this second home prime. But we have that sort of urban prime market that is seeing sustained price increase. We released the report yesterday. I think that states that the expectation of ultra high net worth in Vietnam, so that's anyone with $1 million asset, will increase 26% in the next couple of years. So that driver of prime values, of course, is still apparent. It will continue as there's wealth creation in the country. There's great urbanization is obviously a huge part of that driver also. I think there will be a requirement and an expectation now from investors and from buyers of these apartments. Their expectations are rising. Something that is interesting is
quality expectation.
Quality management expectation. We have had branded residences around for a while, but there's a lot of focus on that as a market here at the moment. The offshoot of that, again, is that these are managed by hotel brands typically. So again, there's a requirement for quality on some of the pricing. And I think that's going to filter into what is an expectation. It should be an expectation for prime, but also for higher end real estate. And I think that's going to be a lasting legacy coming out of pandemic, where we were maybe more appreciative of the buildings we were in and the management and operation of it. And I think now with this push to prime and the expectations around real value for the high prices we're paying, we're now talking regional comparisons when we're saying prime sales rates.
And 10 years ago that was a dream that would never come true, and now it is the norm at that high end of those pricing. So where's supply demand? Is there enough supply in the market? Is there an overhang? Where are we sitting at the moment?
No, I think demand is there. I think that we've seen the slowdown obviously in the coastal locations, and I think that's largely pandemic driven. But there's no shortage of supply. I think there's maybe a consideration of just the amount of, say, super prime properties that are coming to the market at one time. Where there's probably an undersupply is in the affordable segments, which is driven a lot by an increase in land costs. These things are not affordable to build, therefore you can't sell them in an affordable rate. So that's having an impact of maybe pushing a little bit of a shift in terms of where these assets are being developed.
And it's always going to be a consideration in a large city of trying to how do you force that as part of the development process to require affordable housing as part of a larger development.
Correct. I think that has to be policy driven, and for ultimately 90 million people, not many of those are actually looking at the prime market. So there has to be drivers for it. There are some supply constraints, but it's more pricing constraint. I was saying what is now considered affordable. We were talking at affordable housing apartment sales maybe 5 years ago being under $800 a meter. These same assets are now a couple of $1,000s a meter, right? So there's a very realistic check that needs to happen there, and that's more the supply issue. But in terms of for developers and investors, I don't think there's a supply force pressure coming.
Okay, and that leads me into sort of an area that is not often spoken about, and is the property management. You've touched on that, the requirements and the demands, etc. My opinion is, and please correct me if you think this is wrong, is that Vietnam has not focused and has not traditionally had a good property management infrastructure and industry, and it's been a lower focus for build it and then just let it work by itself. Is that an opportunity? Is that a need, or is that changing already?
It's an opportunity, it's a need, and I think actually what it would be driven by is consumer, right? It has to be driven by buyer expectation. And
there was legislation missing to support that originally, so right. Which is, moving.
Yeah. So I think once occupiers are expecting a higher standard for the prices they may be paying, so they'll be holding the management companies, the developers, more accountable. As it's becoming more competitive for the developers and their sales, they will have to make sure they're ensuring this quality of service. That's not to say it's terrible. It's that there is an opportunity for standards to increase. I think developers will find themselves sort of trying to look at this as a sales tool, as a branding tool, as they branch out and become nationally recognized. I think it becomes very important. It's a part of the industry as well that I think has been very slow to adapt. If you look at the opportunities and technology, what you can actually implement either principally through building management, but also that ties into building design and construction. There's an awful lot that can be done there, but ultimately buyers need to demand it. I don't think we're far away from that. So as I touched on with the branded residence side, it is becoming an expectation. We want that level of luxury when we're spending this much money. And I think that has to come through into a lot of the more prominent developers and their assets. But it has already started to shift quite dramatically in the last couple of years.
Mm-hmm. And just to sort of finish off the conversation then, I want to sort of open the floor for where you see Vietnam going, and some of your if you were talking to and investors, talking to some of your clients now, what are you looking at in the next few years? Where do you see things? Where are some of the highlights and some of the risky areas, and some sort of just Alex Crane's view of the world ahead? And like you said, you picked something in 2008 and you're sticking to it. I'd love to hear sort of another one of those sort of forward-looking statements, just to sort of what's going to happen and what you think we should be looking for.
Yeah, well, I think the stories are sort of already written in terms of where the future of Vietnam is going to be in terms of a global powerhouse for manufacturing and export. So of course you're going to drive that back through the industrial logistics markets. I think Vietnam has as we touched on, that investment into infrastructure has been huge, and I think looking at that's going to support equally that sort of manufacturing industrial base, but equally hospitality. And I think Vietnam has a very important story ahead of it in terms of travel. I mean, I don't know about you, in the last couple of weeks with the announcement that they're lifting visa requirements and opening borders, essentially the amount of
the buzz
and the amount of investors that are immediately on the phone saying we are going to come.
Well, they're the ones that have been bugging us the past 12 months saying, when can we come? And I'm not going to do anything until we can come.
Correct. Right. So just that reopening is already very apparent. I mean, we're just receiving calls daily on people that want to be here. But I also know people that are willing and want to travel here. And I think the infrastructure around Vietnam is supporting that. It's becoming an easier place and destination. I think hopefully we get that return tourist that's always been a bit elusive to Vietnam. But those segments I think have probably the most potential for growth. I think the others are going to be, if we're looking at asset types, retail has to change. And I think there's going to be some challenges for developers around that in terms of limited returns, higher cost, higher management fees. But there will be rewards for those that operate well. There's an opportunity for scale. Really, at the moment, it's only Vingroup that have credible scale across that segment. There's room for others to do something slightly different, perhaps. Driven by consumer, driven by the 19 million people here. Of course, that's a segment you can't ignore. It's probably not going to be the most rewarding in terms of capital growth or returns on investment in the short term, but it should be a stabilized asset type. The remainder is going to be driven by urbanization, the way the cities are changing. So it's probably not looking at identifying an asset class, because the performance across the board actually at the moment is solid. It's probably a case of playing those location shifts and how this urbanization is going to change the outlook of cities. People made early bets on 2TM a long time ago. It looks like a wonderful bet right now. Spotting the next one of those is the art, and frankly, I can't call that. can't call that. But there's what I would suggest is that there's no real fear or nervousness about what's ahead. The art will be, I think, looking at assets and actually having to be a little bit more creative and competitive on the design and management of those assets. So I think it's not going to be as an easy ride for the investor developer here. I think they'll have to look at ways of differentiating. They'll have to look at ways of maximizing the performance of those assets. Something I think that will change will be a lot of repositioning of older assets, and we're starting to see these things creaking a little bit now with some development. This is going to have to be something quite new, is the reactive reuse of a lot of these
opportunity for foreign investors with
huge opportunity. Yes, the challenge around those is they are older assets, often on shorter land use rights certificates. So that's one of the challenges. What happens when they are expiring?
And we haven't seen.
We don't
have historical precedent for many of those.
Correct, and that's a very difficult story to sell to foreign investors. But it's a part of the market that needs to be addressed. Developers and investors are creative. They will fix that if they get the ability to do it.
Fantastic. So, Alex, thank you very much for joining me today, and it's been great to talk with you.
Thank you very much. Great to catch up.
Fantastic. And if anyone has any questions regarding the real estate industry or anything we've talked about, please reach out to Alex at Knight Frank Vietnam. I'm sure he'll look after you. And I look forward to joining again next time for our next Acclime conversations. And thank you. Goodbye.